Good morning and welcome to Stock Market Today. It's Wednesday, October 17th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com. Stock Charts TV, you should sign up to receive our Power Feed email for free so you can follow along with this show. Head over to chaikinanalytics.com/today. So U.S. equity indexes were higher in Tuesday's trading after a weak Monday session following last week's sell-off. The S&P 500 climbed back above its 200-day moving average after falling below that level. Technology bounced back, recouping some of its recent losses. Energy, consumer staples were the laggards, though all sectors finished higher on the day. Treasuries were narrowly mixed with a slight flattening to the curve. The dollar was stronger against the yen and little changed on the euro cross. Gold finished up 10 basis points. WTI crude finished up 20 basis points. Breadth was massively positive. New York Stock Exchange was positive 5.7 to 1. NASDAQ positive 4.2 to 1. Outperformers, as we said, tech, healthcare, telecom, and discretionary. Underperformers, energy staples, Utes, financials, industrials, materials, and the REITs. Support, as we get to the desk this morning, futures are down 30 basis points following that big rally. Asian markets were higher overnight with Japan, Korea, and Australia all up over 1%. China did lag. European markets are mixed. Treasuries are weaker. Dollar little change on the major crosses this morning. Gold unchanged. WTI crude off by 50 basis points. And kind of move through that first resistance level that I was looking at for the S&P 500 yesterday in the 2790 to 2800 area. That also incorporated the key retracement level. But what's interesting to me now is we're looking at the 52%. The 50% retracement level comes into play at 2825. That's first resistance. After that, 2852 comes into play. Support at the 200-day moving average, 2766, and then below in the 2710 to 2720 zone. RSI moves up from oversold levels. Chaikin money flow indicator remains bearish. So for me, I think how we react around these key support and resistance levels will really be telling. Our stance has been to be bullish, but with a bit more caution. We've walked through what that means. What would change that view would be to consistently move through key resistance levels. That would make the view more bullish. However, a break of the 200-day moving average sets us up for a retest of the lows. Should we break those lows, that would be a bearish development in our view. Stocks rally from oversold levels and the small caps lead. The S&P 500 and the Qs retake their 200-day moving averages. That's important. Also important is the small caps actually have not. But key retracement levels are just overhead. We would just walk through that for the S&P 500. The picture looks very similar if you're looking at the IWM or the QQQs as your proxy for the overall market. Sentiment has pushed further toward fear, and futures are in fact pointing to a lower open. So obviously some improvement in the power bar ratios with that strong move higher yesterday. Dow at 6-2, bulls to bears, up over 2%. S&P 500 up over 2%. 72 bullish or very bullish stocks for 91 bearish or very bearish stocks. So the S&P still skewed bearishly, but obviously less so following that sell-off and then snapback rally. NASDAQ and the small caps were your big outperformers yesterday. NASDAQ up 2.8%, 21 bullish or very bullish stocks, 19 bearish or very bearish stocks. So we'll see if we can follow through on that, or was it just a head fake? And interestingly, we'll take a look at the NASDAQ and see where the high was yesterday. It's important. Small caps up 2.83%, a little bit of improvement in the ratio, but still really bearish by more than 2 to 1. Tech, big outperformer yesterday, up over 3%. According to the Chaikin Power Bar, small cap stocks are more bearish than large cap stocks. Major indexes are mixed. Our stock of the day. If you received the email and you're following along, you would see that AVGO, formerly known as AVGO, now known as Broadcom, semiconductor company, is our stock of the day today. It has a very bullish Chaikin Power Gauge rating due to very strong earnings performance, very positive expert activity, and strong price volume activity. Broadcom, ticker AVGO, goes out at 238.32 yesterday, up 2.5%. Now, remember, we have not been fans of the semiconductor group. AVGO is a very bullish stock. If I were to look at names within semiconductors, this would be one of the higher quality ones that I would look at. Strong trend, weak industry. We're on that very bullish rating, but it looks like the rating just turned bullish after flip-flopping a couple of times recently. Relative strength, not quite there yet, but improving. What's interesting to me is we go from being a massive underperformer to now being an inline performer. So the relative strength is really improving. We are oversold. We do have bullish money flow. We've retaken the rising long-term trend line. Past 4 quarters have been positive earnings surprises for AVGO. I personally like to see a little bit more outperformance. But what's interesting to me is that we heard from Lam Research last night. Market liked what they heard. Stocks up about 6% in the pre-market. So is KLA. Now, those are equipment companies, but they're in the same chain. Sentiment has gotten pretty negative on semiconductors. And if we can get a couple of positive earnings reports out of big names like Lam and KLAC, that could really help to change sentiment quickly. AVGO is the type of name that I would look at in that environment. If you're aggressive, I can't fault you for taking AVGO here on the long side. If you're a little bit more conservative and want to wait for some more outperformance, I can't argue with that either. Either way, AVGO should be a name you're considering as a long idea. I'll be adding it to my bullish watch list today. Sector movement over the last 5 days, still a defensive positioning, but yesterday really helped to kind of move some of the more offensive groups like communications equipment, or communication services rather, tech and discretionary up the list. But you still have utilities, staples, and healthcare in the top 4. That's defensive positioning. Oil down 6% over the last 5 days. Financials just cannot get any traction despite rising rates. And, you know, what are thought to be good earnings reports. Materials we continue to avoid. Real estate, I have to wonder if that group can do well in a rising rate environment. Same goes for utilities. I think that as the market settles down here after that knee-jerk reaction lower and people unwind some of their defensive positionings, utilities come under pressure. Our industry in focus today, transportation services, and the transports have really been under some pressure lately. Over the past 6 months, transportation subsectors underperformed the S&P 500 by 4%. And that power bar ratio, which measures future potential, is weak. Group is currently ranked number 7 of 21 subsectors and has moved up 9 spots over the last week. Remember, we said yesterday, a lot of weak subsectors have actually been able to move up just because of the carnage that took place across the market. Some of the indicative stocks in transport services that we want to avoid or potentially look at on the short side are Kirby, KEX, Alaska Air, ALK, and JB Hunt, JBHT. JB is a bearish name and it announced earnings recently, stock trade down. Let's look at Kirby Corp. KEX is a very bearish stock with a weak trend in a weak industry group. Dynamic duos in gear, market and model are in agreement. However you want to refer to it, we have a very bearish stock that's underperforming the market. Now, that underperformance has been waning of late, but it's still underperforming the market. The hang up for me here with really opening a position to the short side is the fact that we are closer to oversold than we are to overbought. And, you know, if you are looking for short ideas, whether it's outright short of the stock or buying put options or put spreads, a lot of names that we look at and within our platform are oversold in the near term. Even with a snapback rally like we saw yesterday, a lot of the beaten down names are really oversold. So if you're looking to open positions to the short side, I think it makes sense to have a watch list ready to roll. And when those names become overbought, such as a name like Kirby, you can then open, right? Money flow is bearish under the long-term trend line. Really, the only hang up that I have here is our overbought, oversold indicator is closer to oversold. Add Kirby to a bearish watch list. Let's look at what happened yesterday. Adobe up nearly 10%. Snapback rally, tech rally, and investors like what they heard at their analyst day. Tech rally helps AMD, which has been pretty hard hit of late, to rally 7%. OMC up 7%. Dollar Tree DLTR up 6.8% on rumors that Carl Icahn was taking a position. Progressive, PGR was our bullish stock of the day on October 11th. In the midst of the market selling off, we went out and said, I think you want to own a name like Progressive. We liked it at $68. It closed over 70 yesterday following a good earnings print. GWW down on earnings. Grainger, that's a transport stock. BLK down on earnings. AutoZone down 1.7%, and the materials names continue to be under pressure, even in an environment where the S&P 500 was up over 2%. Freeport and Newmont down over 1%. Underperformance like that is why we avoid those names. Looking at earnings, our updates, Netflix after the close last night beat by 21 cents, but the real number is the subscriber number. That beat as well, and it sent the stock higher by about 11-12%. Morgan Stanley, key financial name, beats by 17 cents. Goldman Sachs beats by 86 cents. Not enough, though, to get the financials moving. CSX beats by 11 cents. Transport name, still transport's under pressure, as we just saw. And we talked about Progressive. Earnings beat takes the stock up higher. As I said, it was our bullish stock of the day for Chaikin Analytics clients on October 11th. Reporting today, Northern Trust, USB, still hearing from a lot of the financials. Abbott, ABT, important name in healthcare. After the close, KMI, URI, and CCI, these are all neutrally rated stocks. We'll also hear from real estate company SL Green, ticker symbol SLG, which does have a bearish rating, and Chaikin suggests caution when holding bearish stocks ahead of earnings. Turning now to kind of the market highlights and what we're talking about in our note today. The Qs retake the 200-day moving average, and this is what I was saying. They did hit a key retracement level, however. They hit the 50% retracement level of that move from the highs to the lows here at around 177.50, and that was like pretty close to the high of the day yesterday. We did retake the 200-day moving average. We did rebound from oversold conditions. Chaikin money flow remains bearish. So it's interesting to me. This 178 level is important, right? 50% retracement. It was support back here. It was, we were chopping around back in the July-August timeframe. If the Qs can get through this level, I think the door opens up for 180 and then a re-attack of the highs. Should we fail here, I think you have to start thinking about the 171 level and then 168 below, and we'll see how some of our indicators react should that happen. But my concern in the near term is this overhead supply lining up with key retracement levels. I think the NASDAQ could have some trouble moving higher from here. That's the kind of my take on it. Small caps, on the other hand, they're leading large caps after that test of support. Remember, we've been talking about this for a while because I think it's really important. We had been shying away from small caps in favor of large, but about a week and a half ago, we back off that call as we were approaching oversold levels. And as small caps relative to large caps here, we're looking at the IWM relative to the SPY was approaching support. And like clockwork, we tagged that support line and bounced higher. For the Qs, we're identifying is the 150 to 150, the IWM rather, the 150 to 152 area on a closing basis as potential support on a closing basis for the absolute. We have bounced higher. We'll see how the market reacts. If you do look at a chart of the IWM, though, that index or that fund is still below its 200-day moving average. And just kind of moving quickly to sentiment, this is the 13-period moving average of the CBOE put-call ratio. And we've kind of bounced up to around 1%, 1 point, and that's kind of a level from which you would expect to see a rally, a contrarian type rally. If we can continue to push higher and get over 1.1%, I think that would be a capitulation low, and you really want to get aggressive on the long side. So we're keeping an eye on it. We're not there yet from a full-blown contrarian sentiment call yet, but we're getting closer. So I would say, sign up for PowerFeed. Get these stock ideas for free every day. ShakenAnalytics.com/today. Have a great day.